They say there is no free lunch in finance, but with asset allocation, you can reduce your risk and improve your returns. So, hi, all, welcome to my channel Green World Investor. The topic for today's discussion is asset allocation. So, in today's topic, we will discuss about what an asset is and how you should structure the different type of assets in your portfolio so that you can generate the maximum amount of wealth in your lifetime. So let's take a look at what an asset is. In simple layman terms, an asset is a resource that helps generate cash flow when sold. So what are the basic type of assets that we know of? They may comprise of stocks, bonds, fixed income, cash, gold, real estate, jewelry, PE, etc. So these are the different assets that we know of. Now, what is an asset allocation? Asset allocation is a process by which you can structure these different type of combination, make a different combination of assets over different phases of your life. Yes, it is dependent on your age also. So you should structure your assets in such a way so that you can generate a maximum amount of wealth. So there are different type of mixes through which you can construct your portfolio or make an asset allocation of your different assets in your portfolio. So many people consider an allocation of 60-40 to be perfect. Now, what do we mean by that? Let's take an example which will make it more clear to you. So let's say that you had 100% equity exposure. Now, God forbid the market crashes by 90%. What will happen to your wealth? Oh, no, you will become a pauper overnight. But say you had a 60% allocation to fixed income. In that case, your wealth would have only gone down by 30% instead of 90% in the earlier case. So now that is the magic of asset allocation. The most beneficial part of an asset allocation is the low or negative correlation between the different assets in your portfolio. So what do we mean by that? This means that the extent of increase or decrease in one asset will not be same as the other. For example, if bond prices go down, equity prices goes up. Now, gold is also a very good asset diversifier, and the prices of gold remain intact in times of war or hyperinflation. In fact, they increase. So, for example, currently for people in Venezuela, Zimbabwe or Ukraine, gold will preserve its value when the currency devaluates. Lebanon also recently devalued its currency by 90%, and which made stocks, equity, bonds all lose their value. So that is the importance of having a good asset allocation. Real estate is also a very good asset diversifier, and my suggestion is that you should buy a real estate property, though many fin influencers will dissuade you from that. They generally ask you to keep your money in equities and stocks. I've also made a video on real estate, and the link of which I will share in the description. Please go through it and also like and subscribe to my channel and the videos, and also share it with others for their benefit. So let's continue. So as previously mentioned, this asset allocation should not be constant, and it should be revisited with your major age blocks. So it should change according to your age. So when we are young, we are more risk averse. We can take more risk, and hence your allocation should be more towards equity. However, as we start getting older, matured, I would say, this allocation can shift more towards your fixed income, because then you need a regular source of income for your wealth, consumption. So that is why you should revisit your this allocation and see how you should allocate, keep changing the asset allocations over time. Now, one rule of thumb for equity is that 100 minus your age. So say you're 25 years of age, you should have 75% of your allocation towards equity. However, much of it will depend upon the current market valuations. So please be wary of that. So in conclusion, I would like to say that asset allocation is a complex topic, and you should take help of your financial advisors to structure your assets, because there are so many assets, so many aspects to look at. What are the current valuations, which one is going to go up, which one is going to go down. your age, your financial requirements. So it is a complex topic, and you should try and not even try, you should understand this in depth, because I believe that yours and your family's wealth depends a lot upon this asset allocation. And as I said at the beginning of the video, that asset allocation, you can reduce your risk and increase your returns. Many people I know have high concentration of their wealth in either real estate or fixed deposits, which are both tax inefficient and very concentrated. Many people I know also have a large chunk of their wealth in equities and SIPs, which I again think is very stupid, because SIPs are also too much hyped in our country. So you should take care of all different pointers, all different um, aspects of assets that you have. Take advice of your financial advisors, and then create a portfolio accordingly to your financial needs, your age, your family's requirement, everything. Structure your asset that way, so that your wealth is maximized and your risks are minimized. So I hope you like my topic here this time. I just chose this introduction of asset allocation. Spoke in we spoke in brief about what different types of assets are, what an asset allocation is, and how it helps you to grow your wealth. So I hope you like my video. Please click on the like sign and also subscribe to my channel. Thank you. Have a nice day. Bye bye.